Hello everyone, welcome to my channel. Today I'm going to talk about, did you overlook something on your prior tax return? Let's get into the video. It is not uncommon to discover that an item of income was overlooked, a deduction was not claimed, or that an amended tax document was received after the tax return was already filed. Regardless of whether the oversight will result in more tax due or a refund, it should not be dismissed. Failing to report an item of income will most certainly generate an IRS inquiry, which typically happens a year or more after the original return was filed and after the interest and penalties have built up. On the other hand, if you have a refund coming, you certainly do not want that to go by the wayside. The solution is to file an amended return as soon as the error or omission is discovered. Amended returns can also be used to claim overlooked credit, correcting filing status or number of dependents, reports an omitted investment transaction, include items from delayed or unexpected K1s, uncorrected or late filed 1099s, and account for an overlooked deduction or anything else that should have been reported on the original return. If the overlooked item will result in a tax increase, penalties and interest can be mitigated by filing amended return as soon as possible. Procrastination leads to further complication once the IRS determines something is missing. So it is best to take care of the issue right away. Generally, to claim a refund, an amended return must be filed within 3 years from the date the original return was filed or within 2 years from the date the tax was paid, whichever is later. If you are concerned that an amended return might trigger an audit, be advised that the fact that you are amended a return does not in itself increase your chances of being selected for an audit. In fact, it might actually reduce your chances, especially if you are fixing something the IRS will find later a way, such as through their program that matches the information forms, W-2s, 1098s, 1099s, K1s, etc., that they receive from employers and other payers with the income reported on your return. What concerns many taxpayers about amending return is that an IRS employee must manually compare the amended return changes with the original. That is why the amended return must include a clear explanation and justification for the amended and backup documentations to support the changes. Even if these were not required on an original return, if backup documentation cannot be provided, the IRS may want to dig deeper. That is why it is so important to provide proof of backup documents to justify the changes being made. Let's say you forget to claim a $2,000 church donation. In this scenario, you definitely want to include documentation such as copies of the acknowledgement letter from the church and your cancelled check, supporting the increased deduction. Thanks for watching this video, and do not forget to subscribe to my channel.